welcome to the closing beat, everybody. Happy Wednesday. Hope you're having a great day here so far. This is a quick show that we do. Call it the closing beat. We just go over the stock market, the good, the bad, and the ugly. Try to give you some interesting stats and things along the way, and of course take your questions once we're through everything. Hope you had a good day here so far. We're also playing a game. It's called Guess the Dow. You go to jazzwealth.com/guess the Dow. And if you're closest to guessing where the Dow closes next week without going over, we'll send you a $100 gift card. If you're one of our customers, we will credit your account if you'd like, or you can take the gift card. Doesn't matter there. There's no games really being played here besides guessing the Dow. We don't do marketing. You can ask anybody that's participated. We haven't sent you one email. We don't really care to gather email addresses and do things like that, although we probably should. I just want to have some fun with you guys, so we're just playing a game, no strings attached. Go out to the website and take a guess. In the bottom right-hand corner of your screen, if you're one of our customers, we got our class coming up tomorrow. Each week we do a class. We call it Wine and Wealth, soon to be done in our new jazz club, wine bar sort of thing going on there. We're working on it, you know. It's getting there, but oh, it's so awesome. I can't wait to share it with you guys. So we got, we're calling it really the Jazz Club, but it is Studio 3J. So we got Studio 1J over there for the FinTip series. This is the second set, and actually where we work during the day, which is our sort of trading studio there, and then behind it is the Fun Zone, the Jazz Club there. So if you're one of our customers tomorrow night at 8 o'clock Eastern Time, as we do every Thursday, we try to teach you something new, give you something there. Tomorrow we're going to focus on our portfolios and the adjustments that we made along with the performance of those portfolios. You can see it all on a website if you're not a customer, just kind of see what we're going to go over. But also go over the markets, forward expectations and stats, things like that. And I'm going to try to work in some geeky stuff there too, if we can, because I know some people are really into that. So no promises. I'm still working on it, but I hope to have it done there. So there you go. Let's talk about the stock market today. Are you done with the back and forth of this rebounding back and forth trade talk, earnings kind of market? Well, you got a little bit more to go, right? So we got the Dow higher by 182, 26 on the S&P, 79 on the NASDAQ. Tech actually led the way today. Basically, trade talks start tomorrow. All of this sort of back and forth in all the sectors that we covered yesterday, and I'll point it out today, that is going to resolve itself here soon as this trade conversation starts, the real trade conversation starts tomorrow. Bloomberg reported overnight that China is actually open to a partial deal, and they hope to come here and make a partial deal. The deal that they are putting on the table is that they will buy more of our agricultural products, really soybeans, and in exchange for not raising tariffs. Remember, October 15th, the $250 billion tariffs, that package of the tariffs goes from 25% to 30% if they don't come up with a deal. And they also said, hey, we won't cut our trip short. It was a lot of bad blood there. We were just sending words back and forth. Tell you what, we'll come over, we'll talk about it for 2 days, see if we can come to a partial deal, and if so, we'll stick around. We won't leave early this time, and we won't threaten to leave early. And so with that, the markets were pretty much happy. Let's go over to the charts and take a look. Here's the S&P 500 on the charts. You can see a little bit of a rebound today, trying to recover from yesterday's sell-off. Here's the problem, though. If you're a technical trader, you have a nice pullback. Everybody likes a good pullback there. You have a nice bounce that makes you feel like it was a worthwhile pullback, but then we immediately start heading lower. What that does for technical traders is it makes them stop. Right? It makes them just walk away and go, I'll figure it out later, right? And so because of that, you had lighter volume today. Nobody really wants to get ahead of the trade discussions there. But what it does is it shifts the resistance area now lower. So this prior high that we saw just a couple days ago around 29.60, that now becomes the line to beat, or line to gain if you want to make a football reference there, in the short term. To the downside, we're using this trend line here. Apparently everybody likes this technical trend. We can tell that. We've been kind of walking you through that day by day, and it crunches the area that we have to work with. So if you're a technical trader, you don't have much to do. You're kind of in a hold, wait and see, go to Disney World, come back tomorrow, see what happens, because we're stuck in between a small range. Think about people that are actively trading or actively making investment decisions. They go, well, if I buy today, what's a reasonable target? The reasonable target is the last place that we ended up seeing weakness. The last place we ended up seeing weakness is just a tiny little bit higher. So the risk of this breaking down and all hell breaking loose versus this tiny little reward means I can't really do anything with that, right? So technical traders largely took the day off. A lot of day trading activity out there today, but basically that's where we're at on the S&P. The problem is you go, okay, well, I'll go trade the NASDAQ. The NASDAQ's even tighter. So we've got this range in here. The risk is too great to the downside for such a tiny, tiny little reward, and we left this line on here now for like 5 days to show you that's the real resistance area that people are using, and it's now very, very clear that that's what they're using. So again, risk to reward is just not there for the active or sort of the active trader or the active investor. It's just not there for them. The Dow paints the same picture, and so because of that, it's a wait and see market. Here's the problem. We've got a wait and see market overall, right? Look back over the last 6 months, over the last year, we've even done this for you to show how the markets really haven't gotten a whole lot done. The pattern is condensing. It's sort of squeezing down where we've got a series of higher lows and we have a series of lower highs. That's unfortunate because that means we just toggle back and forth in between this until somebody makes up their mind. Everybody's waiting for that catalyst. The catalyst could be the trade news. It could be earnings coming up really starting next week. And so the idea here is if you're one of these active traders and you're like, man, what do I do? You're about to find out. You don't have to wait very much longer. This is kind of something I wanted to point out. We're going to try to work this in here. We're going to try to put a study in our class tomorrow night about when the markets essentially go sideways. What's the forward performance when things like this have happened? We're going to study the entire S&P 500 for its entire lifespan and find other moments in time where we can find these compressed moves here. Of course, we'll define it and go over it. If I can squeeze it into our class tomorrow, we'll do that. But the bottom line is, should you expect bigger, greater, better performance, or should we expect weakness going forward? That's the real study. Also, if you have a 401k or an IRA or something, and you've been sort of floating around for 6 months, it's not your fault. You're doing right. But if you look at the stock market, we've wiggled around, and we could draw a nice line right smack down the middle of this and go, that's the average performance. If you're doing a little bit better than the average, good. You made good decisions. If you're doing a little bit worse than the average, I wouldn't kick yourself, right? So if your 401k is lagging behind or something, and you just got that statement because it's the end of the quarter and they sent you the statement, and you're like, come on, what's going on there? Maybe I'm making wrong decisions there. It could be, but more than likely, it's just the market moving sideways there. All right, let's go over to the sectors here. All 11 sectors were positive on the day. Tech led the way, as I mentioned before. We can use like the XLK or SMH. This is now a mess. We'll get rid of that. And we'll just go higher, do one of these little guys. There you go. Oh, there it is. Okay, so tech led the way today, about a 1.5% gain on the day. That's the XLK. If you want to look at semiconductors, since they're more sensitive to the trade discussions here, about 1.75%. However, we kind of keep mentioning this trend line here, the inability for this to really have a significant rally because of that. Even the good trade news really just tried to erase yesterday, but really can't get too much further away from that. You would expect the volatility to continue in the semiconductors as we go through the rest of the week. At least option traders are betting that as well. The moral of the story is sector-wise, look, you got compressed patterns here with very little reward if you were to buy it, but a potential for a pretty decent downside there in terms of risk. And so just people waiting, right? And as we go across all the different sectors, I pointed this out yesterday, if you were to buy this here, where would you look to take a profit? It's too close, right? There's not enough reward there. There's a lot of risk to the downside there. So this communication services, you can go through really any of them there. Basic materials, you got known resistance just overhead. You got the possibility of a breakdown there to the downside. And although it was positive on the day-to-day, you didn't have that really aggressive buying where everybody just said, I got to be in. Even though the Dow was higher, I get it. These are big numbers that we're posting on the screen today. But you have sectors that are sort of undecided. I want to keep pointing that out to you. Retail's the same thing, only a little weaker. Just how do you know? Like, should you buy that? I mean, it's like a 50-50 shot, even worse than normal statistics there, just because everything's sort of messed up. So bottom line is, if you missed today, you didn't pay attention, you didn't really miss much, although you had the markets a little bit higher. Just, you know, there's no juice. There's no meat on the bone, nothing there to expect a large profit in any of these sectors. So it's a tough one. But like I said, you expect resolution to that soon, not only because of where these sectors are kind of holding up there, like we just talked about. You got basic materials at known support. If it doesn't hold, it breaks, and it breaks big, and people expect it to fall pretty sharply as people take their stop losses and things like that. But, you know, you got trade discussions going on. Hopefully everything goes well there. Even maybe a partial deal would be fine. And then you have earnings coming up to help drive some of the reasons why people might dive back in. So that's really all. I haven't had much to say about the overall sectors because they all basically look the same. So we'll move on to stocks. You got Levi's today. Beat on earnings, missed on revenue. Wholesale was their big deal. If you follow along with Levi's, they just recently went public again. But the issue here is they used to sell their pants, their denim, to stores. The stores would sell them to customers, and everybody was happy and made some money. The problem is there are less stores for them to sell to, and Levi's knows this, so they've gone back and said, we want to sell directly to the consumer. We got to get our product directly to the consumer because we can't trust that retail stores are open. I think they said something like 700 stores, brands have closed that were carrying their Levi's, and that hurts them. So they're trying to go direct to the consumer. The wholesale portion, or where they used to sell to like JCPenney or Sears or whatever, and Sears would sell the product, went from about 50% of their business, now it's down to less than 30%. So they're making that transition to sell direct to consumer. However, a little bit rough here in the States. If you look over in the EU, up 18%, so they're doing well there. You look over in Asia, up 12%, I think. So they're doing well over there. Stock was lower today because they're still making that transition, and now they're a public company. They got to report those numbers every quarter, and we get to decide whether we want to buy or sell the stock. And so because of that, you got Levi's a little bit lower on the day. Well, significantly lower, 7.5%. American Airlines basically reported earnings today with a filing that they did with the SEC, although earnings really isn't for another week and a half, 2 weeks, almost there maybe. They also said they won't be flying the 737 MAX until mid-January. January 16th, I think, was the day they gave there because of the software. They're dragging their feet on the software. Nothing's approved anyway. It's not like they can go fly them earlier if they want. They have 24 737 MAXs, by the way. And I looked into this. So last quarter, they canceled 9,475 flights, or basically 4.3 flights a day off the 737 MAX. I thought that was high. Do you guys think that's high? I mean, it's only let's call it 4.5 flights a day for one of their planes, but I don't know. That just seemed kind of like a high number to me. I guess not. So anyways, the earnings that they basically reported ahead of schedule there showed that their revenue per available seat mile, which is one of those metrics that we talked about yesterday that airlines like to track, was up 2%. That beat estimates just by a little bit there. And their overall fuel costs were down by about 1%, a little less than 1% there. So what that tells you is the demand overall is still there, even though, remember, we just had a hurricane, right? So the hurricane came and went, didn't really affect anything for American Airlines, so stock was higher by about 3%. Hawaiian Airlines was the one in the news yesterday, and today it also continued a little bit higher as well. Delta reports tomorrow, by the way. We talked about the stats on that, beating the last 8 quarters in a row and not being lower on earnings. Well, here. Delta has not been lower on a third quarter earnings report, the day of earnings, since 2013. They're expected to report $2.26 a share. Earnings will come out tomorrow morning, so you won't have to wait very long to find out what's going on there. Apple continues its grind a little bit higher, added another 1% there, catching up to Microsoft. I didn't look at Microsoft. Microsoft was a little bit higher as well, so it hasn't quite taken over market cap value as the largest company in terms of Microsoft, but super, super close there. There was an analyst at Canaccord. Raised his price target to 260. We're currently at 227, so he's up off the charts there. He's at 260. He moved his price target from 240. He says, look, I noticed what's going on there where Japan keeps reporting about the iPhone increases in production. iPhone sales seem good to him. And so basically he said that this quarter's earnings, that once they report this quarter's earnings coming up, that it'll be at the high end of the range of what's expected because of the iPhone 11 and doing really well there. So we'll see. By the way, he's a really good analyst. 62% accuracy rating, about 16% average gain on all of his calls there. So it's the guy from Canaccord Genuity or Canaccord, something like that. He'll be the most recent one if you look it up. Anyways, on the stock, there are 18 buys, 24 holds, and only 3 sells. The person who is the most bearish, the analyst who thinks this stock is heading lower and currently is very wrong, thinks it's headed to $150. That's 33% lower. He's essentially saying it's going all the way down here in the next 12 months. We'll see. We're going to keep track of it for you. Chipotle in the news. The stock was higher by just over 2.5% on the day. So Chipotle is got this big initiative on animal welfare. They want to treat the chickens a little bit better because they go through a lot of chickens. So they're going to give chickens better housing, right? The housing will include improved lighting. Everybody likes good lights in their house, right? It'll have improved litter and floor enrichments as well. I just read it real quick to see what animal welfare meant for Chipotle. So better floor enrichments as well. And to improve their breeding, they're actually going to start working with a genetic strain of birds that will grow slower. Those are not my words. Those are their words. I just read it right off of their report there. Boy, they make that sound appetizing. Still love some Chipotle, though, so Good for them, making the birds a little more comfortable until we eat them. You've got NVIDIA higher by 2% on the day. I think this is up like 30% on the year now. It doesn't seem like it, but remember the low was all the way back over here. So doing pretty good there. NVIDIA had an analyst at Piper Jaffray basically said there's two categories for this business, gaming and the data center, and he was bullish on both of them basically. He said the inventory issues and the data center business has stabilized. He thinks the stock is headed higher. We'll see. So far, so good. When you look at this from a technical perspective, series of higher highs and higher lows, right? One could argue that this is in a very sloppy but now uptrend because you keep making higher highs and higher lows. Would that be relatively strong compared to the overall market or compared to the NASDAQ or the S&P, whatever you want to compare it to? I think so, yeah. Even though it's underperforming technically here compared to, the general performance of other tech stocks, hey, still a series of higher highs, higher lows, and you got positive analyst sentiment going on there. So we'll see what happens. If you own it, you like to see that other analysts are on board with you. Johnson & Johnson lost 2% on the day. They also lost $8 billion. A judge ordered them to pay $8 billion to, they have a Risperdal? Is it Risperdal or I forget if that's the one. It caused breast cancer in males. There was a case going on. I believe it was in Ohio. Judge and the jury said $8 billion you got to pay out. So stock lower by 2% on an $8 billion settlement. Crazy. $8 billion bucks. Just like that. All right, 38.6% of the S&P is above its 50-day moving average. A little bit better than yesterday, 31.6 yesterday. We went over how many stocks were above the 50-day by 5% or more, by 2% or more. If you're curious, so try to find some of those relatively strong stocks. Also a relatively easy scan to do if you want to play along there. You got 11 new 52-week highs today, but they were mostly REITs and utilities. 7 REITs, 2 utilities. Target and Schwab, that's how the breakdown goes. So let's look at Target there. Target hit new highs, poking out over that range there. Maybe still a little extended here in the short term, so you wouldn't expect this to just blast off and soar another 10% from here, but so far people are jumping the gun just a little bit. And Sherwin-Williams, just a nice steady performer. Very, very clean and tight uptrend there. And tight by, I mean close to the 20-period moving average. Notice what happens when this stock gets far away from the green line. And that's just a simple way of putting it. We get far away from the green line, it takes a break or pulls back, then continues its uptrend. Gets far away from the green line, takes a break or pulls back, then continues again. Gets far away from the green line, you always get your opportunity to buy that pullback. So if Sherwin-Williams ever gets extended and you're thinking about buying it, you can now look back at that and go, odds are I'm going to get a pullback that I could be able to participate in for now. Next move higher, nice tight uptrend there, all looks good. You got 12 new lows. Most of those were in the oil space. Some of the names from yesterday, Occidental Petroleum hitting new lows there as well. Freeport-McMoRan, FCX is the symbol, hitting new lows. Although a lot of these hit lows and sort of came off that. I'm not saying that's a bottom or anything. It's nice to see if something's going to hit new lows that it didn't just collapse. So basically just a little tick there to show up on the radar. Other than that, a little bit of rally there. This one actually, Marathon Oil actually finished positive on the day. FedEx also made 52-week lows, but really not an exciting day. Didn't get extended or anything. I know some of you are watching that. You're waiting for that sucker to drop. I'll cheer it on for you. Lennar, that's our stats trade, by the way, 66.6% of the time from 3 days ago. It falls about 1% in 5 days. It is down a little bit. We're working our way down there. It is starting to pull back. This is the 3rd day of the move. We've got to get to this line only in order for that to be a positive stats play. We've got 2 days left to go. And so far, so good. I mean, it's basically moving there. Maybe a little bit slow if you happen to be participating. It's what it is. We will keep track of that for you. And a lot of the other stats, I like sharing a couple with you if I can, but a lot of them are so small in terms of moves. The odds of them moving 0.5% or something, it's like I said, it's too much risk to take relative to the reward, and that's, now you know why, right? If you have some way of tracking these stats and you're crunching the numbers there as well, and you find that the odds of making even 0.5%, they're good, but you have to take 2% or 3% worth of risk, it's just not worth it. That's totally understandable right now. U.S. mortgage applications up 5% week over week. That's cool. So we did a video today about why the 30-year mortgage rate's actually going up, and the Fed just cut rates there. What's going on there? So we want to take a look at that. That should be on our channel in the FinTips category there. Why is that higher? Let's see. Bed Bath & Beyond. What's going on with Bed Bath & Beyond after hours here? Trading really high. Got a new CEO. Oh, the CEO, guy coming from Target. Is that Mark Triton? Let me see. Is that, how do you say his name? Mark Triton, is that the guy? Yeah, they got the guy they wanted there. So Bed Bath & Beyond was looking for Mark Triton. I don't know if that's how you say his name, but the bottom line is it's a guy that comes from Target. And you know how well Target's done, right? To revamp everything. That guy had a direct hand in the store remodeling, some of the online stuff, although he's not known for that. He had a direct hand in actually getting Target to where they're at now. Obviously, that's a really exciting move for Bed Bath & Beyond. They've got to be pretty excited about that. And we happen to own that stock, so I'm happy about that as well. What else do we have here? Tomorrow we got CPI numbers coming out. That's a measure that the Fed uses to track inflation. Remember, the Fed wants higher inflation. We covered that in the video earlier today. So that number comes out tomorrow. We'll see what happens there. They want to see higher inflation. We're just not getting it yet. Earnings tomorrow, the only focus really is on Delta. So if you happen to own Delta stock and you're wondering what's going on, odds are in your favor that it will be higher tomorrow, but we'll see. We also have 4 Fed members speaking. So the Fed continues to be out there in droves, letting you know everything's cool, baby. Don't worry about this market. That's essentially what they're doing, speaking at various conferences across the country. AutoZone. AutoZone was a little bit higher on the day. They announced a $1.25 billion stock buyback. Wow, just got all that extra cash to be throwing around there. That's nice. FireEye also higher on the day, 5% higher on the day. They think their earnings that they're getting ready to report will come in at the high end of their previous guidance. And overall billings, they think, will be basically what they expected as well. Stock was higher on that because it's kind of like you got an earnings preview before it even comes out. So that's FireEye. PayPal, that's not it. PayPal's in the news today. Not really moving a whole lot. Like that pullback, though. It's nice to see a discount there. They see about a $228 million loss as it relates to their investments in Mercado Libre and Uber. Whoops. You got U.S. Steel hitting new lows as well. Yeah, U.S. Steel hitting new lows, higher volume. Their CFO is leaving. And I don't know, they're doing something weird there with how they're going to move forward rather than have just like a CEO, CFO, and all that. They're going to try something sort of cutting edge, see if they can have more chiefs running the show. We'll see what happens there. That's basically all I have for you. Let's take a look at some of your questions if you have any. You had some longer-term butterflies calendars playing and collecting theta for funds like yourself. Can you make these plays? We don't. No, we do covered calls for some of our retired customers. Very familiar with what you have going on there, and if it's on the short side, congratulations. As long as there's not a big move, you'll be in good shape. But no, we don't really do that for as a whole. It's just too tough to manage at scale. I wish there was a way to do that. Apple, yeah, we'll cover those too as we get to earnings. I'm going to try to share a little bit more data with you guys in terms of earnings this earnings season so you can get some more stats there. What's wrong with Occidental Petroleum? Out of favor, man. Nobody likes that stock right now. I hear you. A lot of weakness across the board there. People are looking for the names that are weathering the storm. Relative strength, all the relative weakness. Imagine what's happening there. If you're someone who has an oil portfolio, like we have a REIT fund and we have a consumer staples fund, if we had an oil and refinery type portfolio, how would I be managing that portfolio right now? Would I be accepting the losses of all the garbage that's been shifting lower? Or if you're a fund manager, would you be trying to boost your performance by shifting money from the losing positions into the winning positions and show that upside? So when your customers get their statements, they go, oh, that looks pretty good. I thought oil was doing bad. You guys doing good? Oh, cool. I'm happy, right? So that's what these funds are doing. Well, little old Jazz over here, we can do that and nobody's going to know. But if a big mutual fund, a big hedge fund or somebody needs to do that, and we're talking billions of dollars, that raises the tide on all of those other strong stocks and puts that pressure on some of the weaker stocks there. So something to keep in mind there. Doesn't always have to be that there's like, oh, the company's going bankrupt or something. Sometimes just the regular fund flows that make sense from a fund perspective put pressure on stocks, and it'll come away after a while. Love the recap. Oh, thanks. Well, I love that you're watching. Any progress with the Bank of Jazz? Yeah, actually, we should be talking about that tomorrow. Yeah. I'll tell you, the guy that's helping us out with that randomly shows up. You know, like I'm in the middle of doing my thing. I'm building this whole bar over here. Guy just shows up. Hey, man, how's it going? You're welcome to come by, but give me a heads up, right? Anyways, you like First Republic Bank, do you? I mean, I don't know, like, are you saying you own it or something and you're just excited about it? A little bit coming off the lows a little bit. That's actually a great example of a stock that you don't have to guess the bottom. So I get this question a lot. You got a stock that's downtrending and people go, when do I buy the stock that's downtrending? I don't want to buy, they call it a catch a falling knife sort of thing. You think about it, knife's falling and you reach your hand out to catch it, you're going to get cut, you're not going to be happy with it. It's the idea of the stock, right? So if stock's falling, you don't want to just guess the bottom there. And sometimes you'll hear me say, I did a video on this actually about 2 months ago. Sometimes you'll hear me say, let it bounce first. Let it show you that other people are interested in the stock, and then on the next pullback, then you have a reason to take a chance. If I gave you money to manage for me, and you said, I saw it bounce after being in a downtrend, I watched it pull back, and now I'm taking a chance, all right, that's a reasonable expectation that maybe it goes sideways at the least, but maybe you get a little bit of a bounce there. So a lot of times you don't have to guess the bottom, although I know it's human nature, we want to pick the bottom. It's fun. Sometimes you don't have to do that. Hard to watch when it bounces and you're not playing along, but you put it on a watch list, you check in on it, come back to it. The only trade today you made was giving your fiance some money. Well, good luck to your fiance. That's really cool. I've been making a big deal out of build something this year. Go build something. This is your year. If this is the end of the market and we hit economic top, go build something that you can use, hopefully to either enjoy, generate income, or have some cash ready so that you can buy stuff going forward. Good stuff, man. I love it. Is Roku, CMG, Verizon, and AT&T a good purchase for your SEP account? I can't actually answer that question publicly. It sounds like you're looking for a little bit of potential growth, and then you like the dividend plays there. I don't even know how it fits into the rest of the positions that you have, so that's really tough. I'm not one to say you buy a stock only to buy a stock. You buy a stock because it fits into your target goal for that account. So what's the target goal for your account? What are you shooting for? What's the whole objective, the growth rate and all that stuff? Then you add the pieces to the puzzle that help you achieve that goal. It's maybe a backwards way of saying it, but it's really important. Robinhood started 2% interest for the unused amount in a brokerage account. Soon, other brokerages may follow if that works for Robinhood. Yeah, went from 3% to 2%, and that's not their fault. That's just the interest rates moving lower. So understandable. I mean, it's something that the larger brokerage firms have done for decades, so it's really like nothing new. It's just the way they're marketing it is pretty impressive. And remember, Robinhood deals with the really beginner sort of retail trader, so they're just finding clever ways to put that in front of you so that it seems more attractive. I'm all for making a little money on your account, but you know you can do better if you were at different brokerage firms. You actually get paid a little bit more. And now that they don't charge commissions at all these places, maybe something to look at. Maybe something to look at. All right, I think I did it. I nailed it. We covered everything we want to cover. Hopefully answered your questions. I appreciate you guys watching. If you're one of our customers, we will see you tomorrow. I'll be sending out the invite later today, although you just go into the dojo. It now comes live right when we start tomorrow at 8 o'clock. And for the rest of you, thanks for watching. Maybe hit the subscribe button, thumbs up button, something. Leave a comment that you love it, hate it. Either way, it's good with us. Enjoy the rest of your day. See ya.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.